Our theme for the 2017 annual wrap-up is, does your pension fund have a deep state drain? I wanted to talk about pension funds because the underfunding of U.S. pension funds represents a hidden liability to federal, state, and local taxpayers. Whether you have a pension fund, and whether it's federal, military, union, corporate, or state and local government, this affects all of us. I've talked a lot about the financial coup on the Solari report. I believe the coup was a way to engineer the equivalent of all of our retirement savings out before the baby boomers retired. I think it's been happening in places in Europe as well. Pension funds were a device used after World War II to get the post-World War II labor, the baby boomers, to shift from savings controlled by households to savings that could be controlled centrally and reinvested to build the military-industrial complex. Think of this as another mechanism to control and concentrate cash flow. And it was a major mechanism to pull the capital that really financed the U.S. and G7 corporations to grow and dominate in the post-World War II world. That kind of stable labor and stable cash flow concentration was part of taking advantage of the Bretton Woods system that we put into place after World War II. However, globalization has had a very dramatic effect on changing the relationship in the G7 nations between labor and corporations. What we really saw, and this accelerated with the creation of the WTO in the 90s after the Uruguay round of GATT, what we saw was an outsourcing of manufacturing and capacity that allowed the developed world to compete labor throughout the world directly with the G7 nations' labor. If you haven't watched the video that I often recommend of Sir James Goldsmith talking about what this means and why the impact is so profound, I strongly recommend you watch it. With increasing ability to automate or globalize, corporations have been working to shed or minimize or convert their pensions from defined benefit to defined contribution. And in the process, taxpayers have been picking up significant liabilities in the process through the Pension Benefit Guaranty Corporation. The financial coup began in the early 1990s after the Soviet Union collapsed and accelerated after the creation of the World Trade Organization. It culminated in a process we called the bailouts and quantitative easing, but we saw more than 20 trillion of bailouts in the United States for the banks. And we know that 20 trillion is missing from DOD and HUD. And of course, there's been continued and significant quantitative easing by the U.S. Central Bank and the European Central Bank and central banks around the world, particularly the G7 central banks. Now, if you listen to the various estimates of the underfunding of U.S. pension funds, anywhere from $5 to maybe $10 trillion, if you include everything, Social Security being a different discussion, it's very important to put that in perspective. Again, figure 20 plus trillion of bailouts for the banks, 20 plus trillion missing from DOD and HUD. Does 5 trillion sound like such a big number? I didn't even add on numbers for the quantitative easing, but I always put the financial coup at least 50 trillion as my sort of back of the envelope estimate. So we're talking about underfunding on the pension funds, which is, a significantly smaller 5 to 10 trillion compared to 50 trillion sounds like a small number. So do we have a pension fund crisis, or do we have a symptom of other kinds of crises that are underway? Is it a crisis because we're skimming more through the back door of our pension funds? Is it a crisis because the governance structure of our pension funds in our society is not what it's supposed to be? I would say what is a crisis is that we're not organizing our federal, state, and local investment to optimize the GNP, and that's a very major long-term drain on everything, including the pension funds. What is a crisis is we're poisoning our population with fluoride, with GMOs, with EMF radiation, and spraying heavy metals over our head that is explosively raising the cost of everything, including healthcare and retirement. So I want to talk about pension funds. It's time to shift the narrative so that we can put pension fund underfunding in perspective with the trillions going for bailouts, for quantitative easing, for missing money, and start to talk turkey about how to get the U.S. retirement system and the U.S. budget and the U.S. economy back on an economically sane footing.